I think the TARP has had a lot of benefit in terms of keeping things from being even more disastrous than they've been. There's been a lot of work done on how bad a recession can be when it's coupled with a bad banking crisis. It's a lot worse than we've gone through so far. So hopefully the TARP has been one of the things keeping it from getting that bad. You know, there's right from a business point of view and there's right from a public policy point of view. And then there's the intersection. Since we've handed them money, to what extent do they take on public policy obligations? From a business point of view, if I were running a bank, I wouldn't be making a lot of loans right now. We're going into what may be the worst recession. We're in the worst recession since the Great Depression, and it's getting worse. Everybody's worried about whether they actually have as much capital as they claim they have. And even if the bank isn't worried, their depositors and creditors are worried, and their shareholders are worried. The smart thing right now from a pure business point of view is just hunker down, don't lose a lot of money, and keep your job. Now from a public policy point of view, it may be smart for consumers not to spend as much. It may be smart for manufacturers not to invest. It may be smart for the banks not to lend, but it's disastrous for the economy. If everybody just holds off on doing anything for a year, we crash. So from a public policy point of view, we're looking for some way to move people to do things again. You can make a case that lending's grown a little bit or shrunk a little bit. But the key here is the hope was that there'd be substantially more lending. One of the problems, though, is that the banks are concerned about having enough capital to protect themselves. Capital is there to protect you in case your loans don't get paid back. And it's a scary environment right now. And because of these toxic assets, people are afraid that their capital may not be 11% of their loan volume. Maybe it's only 7% if they really knew the value of these assets. So they're hoarding capital. And the only way to improve that ratio of capital loans is either make fewer loans or have more capital. They're having trouble getting more capital, so they hold back on loan growth. Well, the three people are talking about are a bad bank where they buy the assets, a guarantee structure where the government provides a guarantee on those assets somewhat below it, and finally nationalization, where the government takes over the banks, at least the weak ones. They're all bad solutions, but in my opinion, the least bad solution is for the government to provide significant guarantees somewhere south of the current estimates of value. And then those banks that are still weak, even with that kind of guarantee, should just be taken over.